2 powerful ways to structure a wraparound mortgage deal and make money without using your credit. Hey, what's going on, investors and hustlers? Welcome to my real estate dojo. I'm Mike, aka Mr. No Fluff. In today's lesson, we're diving deep into wraparound mortgages, specifically 2 powerful ways to structure a wrap so you can buy houses with no money, no credit, and build massive cash flow just like I've done. If you're new to creative real estate investing, especially subject to owner financing and wraps, I highly recommend checking out my previous videos so you fully understand how to buy homes like a bank and generate wealth the smart way. Today's training is super practical and very real, so grab a pen and pad because I'm breaking it down step by step. What is a wrap? First off, what is a wraparound mortgage or a wrap? In simple terms, a wrap is when you buy a property where the seller still has an existing mortgage and you create a new loan on top of that existing mortgage, hence the term wrap. You're literally wrapping the new terms around the old loan. This is one of the best tools in creative financing because it allows you to buy properties without going to a bank, without using your credit, and often without even putting much down. You become the bank, you collect payments, you set terms, and you control the cash flow. Strategy number 1, the mirror wrap. Now let's break down the first strategy, the mirror wrap. With a mirror wrap, you simply mirror or exactly match the seller's existing mortgage terms. That means the interest rate, the principal balance, and the monthly payment you agree to take over will be the same as what the seller owes on their mortgage. Example, let's say the seller has a mortgage balance of $100,000 at a 5% interest rate with monthly payments of $1,000. You agree to buy the house and continue making those exact same payments, $100K, 5%, $1,000 a month. That's your wrap. Key points to remember, there's no markup. You are not changing any numbers. You're simply stepping into the seller's shoes. Why use this strategy? Because it's fast, simple, and often easier to negotiate with motivated sellers. There's no extra equity to fight over. You're just solving their problem and walking into a deal. You can either hold on to the property for rental income or wholesale the deal by assigning it to another buyer. That's called a mirror wrap assignment, and it's perfect if you want a quick 5K, 10K, or 20K without the headaches of managing the property. Strategy number 2, the markup wrap play around strategy. Now let's go into the second and more profitable strategy. I call it the play around strategy. This is where you really start to build cash flow and back-end profit. Here's how it works. You still buy the house based on the seller's terms, maybe $100K at 5% with $1,000 month payments, but you turn around and sell the property to a retail buyer at a markup. Typically, this buyer is someone who can't qualify for a traditional loan, is self-employed, has bad or no credit, needs flexible terms. Example, you sell the house for $120,000 instead of $100K. You offer financing at 8% instead of 5% and charge $1,200 a month instead of $1,000. You also collect a down payment, maybe $10,000 or more. This gives you 3 income streams. 1, down payment, instant cash in your pocket. 2, monthly cash flow, the difference between what you pay the seller, $1,000, and what you collect from the buyer, $200. 3, back-end profit. When the buyer eventually refinances or cashes you out, you collect the spread between what you owe, $100K, and what they owe you, $120K. Why this is powerful? You might be wondering, why would someone buy a house with these terms? Simple, because you're offering what banks don't. You're giving buyers with bruised credit or self-employed income a shot at home ownership, and in return, you get premium terms and full control. This is why I love creative financing. You're not just buying a house, you're buying an income stream and positioning yourself like a bank. Think about it. You're buying a house using someone else's mortgage, selling it using your own terms, and keeping all the profit in between, all without needing big money or bank loans. Bonus tip, wholesaling the wrap. Let's say you don't want to hold the property. You can still make money by wholesaling the wrap. Once you have a mirror wrap under contract, you can assign it to an end buyer for a fee, maybe $10K, $20K, or more, depending on the deal. You won't get the monthly cash flow or back-end profit, but if you need cash now, this is a powerful strategy to generate quick income without owning anything long-term. Gang, this is how I started. No money, no credit, sleeping in my car, but I learned these strategies, took massive action, and became my dreams. And if I can do it, you can too. This is America, the land of opportunity. Don't focus on what you don't have. Focus on what you do have. If you've got a car, a phone, internet, your health, You have what it takes to make this happen. Use what you've got, learn the skill, talk to motivated sellers, practice structuring deals. This is real, this is possible, but you have to take action. If this video helped you understand how to structure wraparound mortgage deals, do me a favor, smash that like button, leave a comment below, and share this with someone trying to escape the rat race. Want to learn more about wraps, subject to, and wholesaling with no money or credit? Grab my book and course, The New Flip, at http://www.thenewflip.com. It's a smart game that teaches you how to make money today while building real estate skills. Or visit www.myrealestatedojo.com to get my free trainings, advanced courses, and coaching. Join the reboot movement. This is my personal mindset reset for hustlers who feel stuck, overwhelmed, or like they're spinning their wheels. Reboot will help you rewire your brain to take massive action, overcome fear, and dominate your day. Start your reset at myrealestatedojo.com. Reboot. Thanks for watching. I believe in you. Now go out there and make it happen, and don't let anyone steal your dream.